Let's take another case study. The following data relates to the manufacture of a standard product during the month of April, let's say 2018. You have information related to raw materials, direct wages. Then with regard to mission, you have mission hours worked, which is 10,000, and mission hour rate is rupees 8. Then admin overheads 35,000, selling overheads per unit is available 5. Units produced is 4,000, sold is 3,600, selling price per unit is 125. You are required to prepare a cost sheet in respect of the above, showing cost per unit and profit for the month. So you have to prepare a cost sheet where you will have a column for the total, and you should also have a column for cost per unit. So let's get started. First we can capture the raw material and direct wages because they are given directly, and we have to prepare this cost sheet with reference to the units produced, right, which is 4,000. So let's get started. Cost sheet will have 3 columns: particulars, total cost, and cost per unit, and here the output is 4,000 units. Of course the sold units are only 3,600. First we are capturing the raw material, which is 1,80,000, and direct wages 90,000. And when you add these two, that is raw material and direct wages, we will call it as prime cost, which is 2,70,000. If you want to know what is the cost per unit, take each and every item divided by 4,000. 1,80,000 divided by 4,000, it is 45. 90,000 divided by 4,000, it is 22.5. Of course the total 2,70,000 divided by 4,000 is 67.5. This is your prime cost. Now you can add your factory overheads. Factory overheads, this is nothing but the 10,000 mission hours multiplied by rupees 8 per hour, so 80,000, and cost per unit is going to be 80,000 divided by 4,000, it's 20. So with prime cost, if you add factory overheads, what you get is cost of production. So 2,70,000 plus 80 is 3,50,000, and cost per unit 3,50,000 by 4,000, it is 87.5. Now we have to factor the opening stock of finished goods, closing stock of finished goods and all. But opening stock information is not available, but closing stock information we can derive. How? Unit produced is 4,000, units sold is 3,600. It means 400 units were remaining unsold. So that 400 units, look at here, 4,000 minus 3,600, 400 units should be captured here, should be deducted from this cost of production, because whatever produced is not sold. So there is something unsold also that you have to deduct if you want to arrive at the correct cost of goods sold. Okay, so 4,000 minus 3,600, 400 multiplied by 87.5. What is this 87.5? This is cost of production per unit. So 400 multiplied by 87.5 is equal to 35,000. That has been deducted from 3,50,000. You get your cost of goods sold as 3,15,000. Now this 3,15,000 is the cost of goods sold, and if you want to know what is the real cost per unit, you have to divide this 3,15,000 by 3,600 units, in which case you will get it as 87.5, right? Next, why? Because look at here, 3,50,000 divided by 4,000 is 87.5, and what is sold, for that only you have to factor. So we are deducting unsold units, that is 35,000, its value. We have cost of goods sold as 3,15,000, and the sold units are only 3,600. So 3,15,000 by 3,600, you get 87.5. Now with this cost of goods sold, you have to add admin overhead, selling overheads. Admin overhead, what information you have? Directly they have given what is the admin overhead cost, which is 35,000. So add admin overheads 35,000. We'll put it here, 35,000. How do you arrive at admin overhead cost per unit? Admin overheads is for the entire production, right? So you have to divide this 35,000 by 4,000 units. So you get 8.75. Whereas selling overheads is a different story. See, add selling overheads, and in question they have given you selling overhead cost per unit is rupees 5, and how many units are sold? Only 3,600 units are sold. So we have to take 3,600 multiplied by 5 per unit, which is 18,000, and of course this 5 is directly given in the question. So with this cost of goods sold 3,15,000, if you add admin overheads and selling overheads, you are going to get the cost of sales, which is 3,68,000. 3,68,000 is the cost of sales. And with this 87.5, you add these two items. 87.5, here you have 8.75 and 5. So you get your cost of sales per unit as 101.25. So this is with regard to cost of sales. So we have answered our question 1, that is the preparation of cost sheet. Question 2, you are also expected to find out what is a profit. Let's go. Statement of profit. First we'll calculate the sales revenue. What is the selling price per unit? Given in the question as 125. How many units are sold? 3600. So sales revenue is 3600 into 125. It is 4,50,000. From that deduct the cost of sales which we have just calculated, that is 3,68,000. Less cost of sales 3,68,000. So 4,50,000 minus 3,68,000. This 82,000 is the profit. That is what required in your question 2.